Assalamualaikum warahmatullahi wabarakatuh. We are from Group 7 and we gonna present about financial statement in public sector. But before we continue to the explanation, let me introduce our group's members. The first one is myself, Chandra Kirana, and the second one is Siti Nuranisa. So there are several topics that we're gonna explain in this PPT. The first one is definition, purpose, and function of financial report. The second one is differences between public and private finance reporting. The third one is forms of financial report. And the last one is effects of financial report and the user of financial report. So for the definition, purpose, and function of financial report and the differences between public and private finance reporting will be presented by Siti Nuranisa.
Definition of report. A report is a document that presents information in an organized format for a specific audience and purpose. Report conveys the information which are used to find the facts or to assist in decision making or solving any business problems. Is the definition of financial statements. Financial statements are written records that convey the business activities and the financial performance of a company. Financial statements are often audited by government agencies, accountant firms, etc., to ensure accuracy and for tax, financing, or investing purposes. Report purposes and functions. Reports communicate information which has been compiled as a result of research and analysis of data and of issues. Financial reports provide basic information to people interested in the performance of an entity or the users. They allow the entity to be held accountable for how it manages and uses the money it receives. Public sector financial reporting is designed to provide candidates with the technical knowledge and skills required to perform financial reporting responsibilities within the public sector. The module takes the candidate through the key international public sector accounting standards. The public sector accounting has three purposes. First is demonstrating the propriety of transactions and their conformity with the law-established rules and regulations. The second is measuring current performance, and the third is providing useful information for the efficient control and effective management of government operations. Difference between public and private finance. The main difference between public finance and private finance is the public sector is made up of all government agencies, corporations, and local office. The private sector is made up of companies and individuals. Public companies make their financial reports available to the public at large. They don't limit distribution only to their present share owners and lenders. In contrast, private companies generally keep their financial reports private. They distribute their financial reports only to their share owners and lenders. Objectively, the difference between public sector and private sector is public sector is offering services to the members of the public, while the private sector is to make profit. Then in the ownership side, the difference of public sector and private sector is public sector is owned by the government or the general public, while the private sector is owned by investors or shareholders. On funding, the difference between public sector and private sector is the public sector is funded by government while the private sector is funded by the owners.
So I'm gonna explain about the forms of financial report and the last topic about effects of financial report and the user of financial report. Forms of financial reports. So there are 5 reports in public sector. The first one is statement of financial performance. The second one is statement of changes in net assets or equity. The third one is statement of financial position. The fourth one is statement of cash flow. And the last one is notes to the financial statement. A statement of financial performance. A statement of financial performance is an accounting summary that details a business organization's revenues, expenses, and net income. Preparing a statement of financial performance means knowing a lot of important information about how money comes into your business and how it goes out. Three financial statements comprise the statement of financial performance: income statement, balance sheet, and cash flow statement. The income statement reflects a company's revenues and expenses. It shows the company's bottom line so you can see how profitable your company is during a certain period of time, such as quarterly or annually. The statement of financial performance takes into account sales revenue, cost of goods sold, and other operating expenses and income. The third one is balance sheet. The balance sheet reflects where your business stands financially at a certain point in time. The statement of financial performance takes into account assets, liabilities, and shareholder equity to make sure assets are equal to the other two factors. The balance sheet incorporates the net income determined on your income statement. And the fourth, cash flow statement. The cash flow statement looks at how money moves through your business. It shows increases and decreases in cash from operations, investing and financing during a period of time. The statement of financial performance shows the net change in cash balance using numbers from both the income statement and the balance sheet. Statement of changes in net assets. The statement of changes in net assets details the change between the current and prior period for the net asset balance. The statement of financial position, also known as balance sheet, represents the assets, liabilities, and equity of a business at a point in time. For example, assets include cash, stock, property, plant or equipment, anything the business owns. The main purpose of the notes to the financial statement is to further clarify accounting procedures used by a company, as well as to divulge information that has occurred during and immediately after the close of the accounting period. The financial statement can affect on decision making. So, the financial statement can have a drastic effect on the stock price of the company. Many investors look at the financial statements when making investment decisions. If information is presented in a financial statement that is better or worse than expected, it can send the stock price up or down. And the last one, I'm gonna present about user of financial report. The first one is owners and investors. The second one is management. The third one is lenders. The fourth one is trade creditors or suppliers. The fifth one is government, and the sixth is employees. So I think that all about our presentation. Thank you for your attention. Don't forget to like, comment, and subscribe this channel. And see you. Wassalamualaikum warahmatullahi wabarakatuh.